There's really four different types of construction charts, and I'll go through each of these somewhat quickly. So go through. This really doesn't require much explanation. It's a line chart, right? We just connect the dot to the closing price of the security on each day. We just draw a straight line connecting the closing prices. Very, very simple, but nonetheless, it tells us a story, very, very, very clearly. What's the general sentiment, for this stock that we're looking at? You don't even need to know what the name of the stock is. What does everybody think? They're positive or negative? Negative, right? Going straight down. So very quickly, and a lot of professionals on Wall Street, the first thing they do, even if their job is as a fundamental analyst, the first thing they do when they're presented with a new security or a new company to look at, the first thing they do is pick out a chart, go to the computer and look at a chart of the company, because that one chart right there, that has just told me, just right there in a second, you guys just determined the view on this company is negative, and you're correct. This chart was a couple years ago. This is a company called Taser. People thought Taser was just going to be the next, big thing since Google, and obviously it didn't work out, and the stock, really, really plunged. But you can get a quick read of the sentiment for a stock very quickly just by looking at a chart. That's the most simple type of chart, the line chart. This type of chart, you guys have seen bar charts, and again, you've probably seen them in the newspapers and all. Here's where some of what I'm going to tell you, I think, maybe new and informative for a lot of people, even on Wall Street. A lot of these slides that I use, I teach a class in technical analysis on a basic bar chart. What do those lines on the right and left of the bar chart mean? You've seen those out right in the newspaper, the bar chart. On the left side is the open. On the right side is the close. So we have an indication here. The vertical bar is the high and the low, so that's the range of trade that during the day. But in the morning it opened at this point. If they have gone down, if they have gone all the way back up to 3 o'clock and then given some of it back, and that's where it closes. So we get a lot more information now out of the bar chart. We can flip to the next. This is just a series of bar charts. This is the same chart of Taser. You can see these are what are called gaps here, right? You see the gap between the stock trading. You see here's a gap. Here's a gap in the stock's trading right there. And that starts to tell us why is there a gap. Because the stock traded at one level at 4 o'clock in the afternoon one day, the next morning, gap down, right? Or it gaps up. So we start to see a bit more information in the bar chart. Well, with the bar chart, how many of you, especially if you sit in the back of the room, can see those horizontal lines on the left and the right all that clearly on the open and close? You can't see them all that well, can you? It's a little tougher to read the chart. So the next innovation was, and this is actually not a new innovation. Remember I talked about the 1700s and charting the rice markets in Japan? We have the same 4 pieces of market data that we're going to look at with the bar chart. We're presenting them in a more logical way, more readable way, more visually attractive way. We still have the vertical bar, right, with the high and the low, and we still have the open and close, but instead of just a line vertically or horizontally from the open and close, we create a rectangle now with the open and close, so it's a lot bigger. And so it's a lot more visually easy to analyze. What we then do with that is, on days when the market goes up, we leave this is called the candle. We leave this, and this part is called the real body of the candle. We leave it hollow or empty, so it's white. And on days when the market's down, we fill it in, so it's dark. And I'll show you a slide in a minute, so you can very, very quickly visualize whether the market's going up or down, whether the candles are dark or whether they're white, whether they're filled in or not. Just some basic terms. These are called the wicks. The whole thing is called the candle, and this is called the real body of the chart. So there won't be an exam at the end of this, so those are just some of the terms. And again, these are termed back in the 1700s. So here is the same chart of, again, of Taser, and you can start to see, you can see this chart, this candle here, the white real body here. So obviously that's a positive day. Look at all the black candles here. I don't see a white candle here. For what is that? From, on this chart, we're going from mid-August to mid-September. For a whole month, can you imagine owning that stock and looking at the newspaper every day? Down, 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 down. Well, I guess you don't have to imagine stocks these days, right? But you can see it very, very, very clearly, just looking at this chart here, we have all black candles, right? So that tells us very, very clearly, what the trend is. It's very negative.